Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, what's coming up on the show today?
Well, we're going to talk about two of our favorites, Amarc Resources and Arizona Gold, and to what extent the new records that gold is making are starting to tickle interest upwards in the resource juniors.
Any new developments for the KRO 2025 Favorites collection?
There are a number of companies that have put out reasonably important news releases that I'm not going to talk about today. I'm going to save that for, say, next week. But the index has been creeping higher. The Favorites Index, it's up 10%, which is better than 8.4%, but still behind gold, up 11.7%, and that is as of February 13th. The week was interesting because on Monday, gold punched through 2,900, was at 2,904 in the London market. And what I thought was interesting was on that day, the TSX Venture value traded for resource listings, it surged up to $17 million. Normally it is $30 to $40 million, sometimes $20 to $30 million on some days. But this is the highest it's been since September 20th when it hit $81 million of traded value. However, that did not really last, even though on Thursday, overnight from London, gold had made an additional new high to $2,915. Now, the market, we're starting to get this sense that people are coming around to the idea that gold is not heading back below $2,000. But then on a day like today, Friday, when it got knocked back $30, $35, there was again red across the screen, even though the resource juniors have not really had any serious reaction to the upside related to gold, being at $2,900 and threatening to go through $3,000. So it is still, the market is still nervous that we are in a sustained uptrend. And of course, every day there is some bizarre new announcement out of the White House about how it is upending all the rules and assumptions that the world has gone by. And it is becoming so grotesque that people are sitting back and wondering, if it's this crazy already and they've only gotten started, what about when something serious happens, such as China or Russia pushing the envelope and then putting the United States on the spot in need of some sort of response, but everybody else on the sidelines saying, we don't trust you anymore. We don't know what you're going to do. You're on your own in this. And, the markets, senior markets continue to inch higher, up one day, down a little bit the next day. There's still no concern, even though this week we got the inflation results and CPI year over year was back to being up 3%. And this is really before we have seen any consequences of tariffs, of immigrants being rounded up and extracted from the meatpacking factories and the agricultural fields where they are like key workers, and about 30-40% of them are apparently undocumented. And I can't imagine America's Proud Boys doing any of these jobs for any amount of pay. So there's some potentially serious inflation problems down the road, and this may be what helps gold up. But again, the GLD ETF, no interesting development in terms of retail buying. It was up a few days, but then wham, it was back down 150,000 ounces in one day. The retail investor still seems to be fascinated by the whole crypto phenomenon. And it was kind of hilarious to read in the Financial Times that Donald Trump's crypto wallet, for whatever strange reason, is open for everybody to see. But even more strange, people can donate coins into it. And so we've seen about 700 of these meme coins created by all these crypto grifters, and many of them have the word official or Trump attached, and they have been like squatting on top of Trump's wallet and dropping these turds into his wallet so that anybody who looks in it sees these other things. Oh yeah, here's another Trump-endorsed crypto coin. Let's buy this. And the MAGA crowd that's in love with these crypto Trump-related coins has been having their heads handed to them by massive swings in these pump and dump crypto coins, because these things are like OTC bulletin board stocks where the grifters load up on all this super cheap stock and invent some idea about why the stock's going to be a super success like real companies. And when the suckers come in and buy it, they just fill their boots with their paper. Well, now they do it with their digital coins that they've all loaded up in the beginning. And I think the embrace of gold as a safe haven, as a more sustainable asset class, there's going to have to be much bigger losses in the crypto world handed out to all these people who think that crypto is going to be the foundation of the future. So back to stuff that interests me, which is the resource junior sector. It is intriguing to see that my bottom fish collection for 2025 is up a considerable amount. It's up 24%. And why is that? Well, that is because the leading stocks in it, Amarc Resources, TDG Gold Corp, and Finlay Minerals, which is still in the bottom fish collection. The other two have been promoted to the favorites collection. They are the champs of the bottom fish collection because of that discovery in the Toodoggone District, where there is now a major rethink underway after Amarc produced results on January 16th, 17th, 16th of that weekend, indicating that they have a copper gold discovery with gold grades in the 1 to 4 gram per ton range over 100 to 200 meter thicknesses, and extremely consistent, not spikes up to a couple hundred grams or so that allow them to smear the average grade up. No, a solid new discovery. And so that's why today we're going to talk about Amarc's latest move that it has made to expand its land position in that area. And we're also going to update on Arizona gold and silver and the kind of troubles it's encountered this year. It happens to be the worst performer in my favorites collection, and I'll explain why some of that is deserved, but to a large degree, it is way too early for the market to be so harsh.
What have we learned so far from Arizona Gold's Philadelphia drill program?
Well, they put out their first results on January 29th, and this unleashed all kinds of mayhem. And so the poor CEO, Mike Stark, he's had to deal with the investor confusion about what these Philadelphia results are all about, a margin call that tanked the market the day the news came out. There's also a $4.6 million private placement done in October at 30 cents with a half warrant that's good for 3 years. That came free trading on February 6th. And all of this has come together to knock Arizona Gold down from its 50-cent starting price and kind of turn the glass from half full. And this was one of the unusual juniors where at the end of the year, the market had a glass full expectation to it. Now it's slipped to kind of a glass half emptiness. Now, first of all, the private placement. Some of our listeners may not understand the concept of a private placement. In Canada, a company can raise money directly from investors through a mechanism called a private placement. You have to be, for the traditional kind, you have to be an accredited investor, which means you have to have a net worth of $1 million, not counting the net equity in your primary residence. And these private placements typically come with a half or a full warrant, and it can be as long as a 5-year warrant, depending on, what the power balance is. Is the company desperate for money, and can the investors, grind them and say, we want a five-year warrant? But the important thing is these private placements have a 4-month hold, and you can't sell it before that. But when that hold period is over, there is often a rush by the placees to clip the warrant and flip the stock, get their original investment back, and then just have a free lunch for the rest of the term of the warrant. Now, this financing had, a number of serious investors, but it also apparently had a lot of smaller investors. The TSX Venture used to include the number of placees that participated in a private placement when they published their formal notice that it has closed and was approved. But last year they stopped doing that. Why? I don't know why. It's part of this principle of the less the public knows about these resource juniors, the better the grifters can exploit them. Something bizarre like that. But I like this information because I can tell from the number of placees how strong the financing was. In this case, it turns out that there were 63 placees. Now, maybe there were 5 or 10 solid placees, but there were a lot of smaller investors who participated. And the bigger investors understand, we've got this major drill program going. We've got the BLM permits in place for 2 drill pads that can do a lot of drilling along the strike of this Philadelphia vein. But the smaller people will be retail people. They'll be more nervous, less patience, and I suspect that a lot of them with their 30 cents cost base and this 40-cent warrant, and they see it up there when it was at 50 cents. As soon as this came free trading, they started selling just so that they do not have any exposure to a catastrophic outcome. Now, the problem with the January 29th news release is that it had results for 2 holes. One of these was a horizontal hole drilled on the rising fawn claim, and this is the patented ground where you do not need a BLM or U.S. Forest Service permission to drill. It's private land, so they can drill as many holes there as they want. And it had a pretty good intersection. It was low grade, but that wasn't really what the market noticed. Somebody noticed that the first hole from the BLM pad number 1, that was not so good. It was only, where do we have it here? It was a much lower grade than we had hoped for. It was 0.563 grams per ton over, whatever the 40 meters or whatever it was. But that was not the grade the market wanted to see. This was in the hanging wall of the Philadelphia vein. This is where the flow dome rhyolite is supposed to have been enriched so that you get grades in the 1 to 2 gram per ton range over substantial thicknesses. And when it came in there at not a very thick interval, at 0.5, 0.6 gram per ton, the market said this is not going to be a very good open pittable system. So in that location there, that particular hole, the Red Hill hypothesis is not being confirmed. And somebody, I think, on the open saw this and they hit the bid, and that triggered somebody who has a margin account. And of course you can't margin the stock like Arizona Gold. However, if you've got the NVIDIA or whatever in there, that is marginable. And on that day when the Arizona Gold's price started to go down, it triggered a margin call. So all of a sudden the stock got tanked all the way down to 25 cents, which of course you have a news release that isn't telling you what you wanted to see. You see a fierce market reaction like that. So everybody else joins in. And so poor Mike Stark had to sit there and catch falling anvils and knives all day to shore it up and say, no, this is not the end of the day. Half of the news release is is good news. And they finally stabilized it, and it's back into that sort of 35-40 cent range. And on February 13th, they put out another press release, and this was holes from the Rising Fawn area. Now, this area had been drilled by Meridian in the past, but only in the northern part of the Rising Fawn claim. Now they've started drilling holes into the rest of it, and they're starting to get good grades of decent widths over 1 gram per ton. So now what's emerging here is kind of a new story. The old story had been on the Perry claim, which is farther south. They've drilled this high-grade Philadelphia vein. It looks like an underground mineable target, might have up to 500,000 ounces of high grade. And the bulk tonnage scenario was the Red Hill hypothesis. You step to the east off the patented claims, you drill from the BLM land, and you demonstrate that sitting in the hanging wall are like 50 to 100 meters of mineralized rock grading 1 gram per ton or better. And this has been what has attracted everybody. And the fallback was, well, if it's not really there or good enough, the vein, well, we can chase it farther down dip. And unfortunately, that first hole, number 132, didn't really intersect high-grade Philadelphia vein down dip, and the hanging wall portion wasn't of over 1 gram per ton like the market wanted to see. And the company did point out that, well, we drilled one more hole farther down dip, which was intersected, and in their section they show some mineralized interval. They don't have assays yet. They drilled an even farther one down dip, but they lost it. The rod jammed. They have to give it up. And so they fanned one hole to the north to kind of coincide with the same depth as hole 132 reached. And in the press release, they stated that the depth of 132 pretty much is the open pit limit, and we need to see what the assays for these other holes are to determine if we do have a heap leachable, open pittable resource in this area. But the focus now is shifting to the Rising Fawn thing, where it now appears they may have an open pittable resource there. And the horizontal hole drill that was used to drill basically into the cliff, that they've sent that away. That was the first hole that they reported, a hole 140. They've drilled a couple to the north, and those were good. And they've now got the core rig while they wait for the BLM holes to be assayed. They've got a fence-of line that they'll drill all the way down to the basically where the Perry claim begins, and just at the southern end is where BLM pad number 2 is. So I think we should, for now, suspend the Red Hill hypothesis and take a wait and see attitude on that. But watch this drilling on the Rising Fawn claim. See what this fence of holes, which are these angled holes, and these are core holes, not the RC holes like Meridian drilled. And then if those are good, and then they step onto the BLM claims where they can drill, the part that's not really accessible from the Rising Fawn claim, there we may end up with the bulk tonnage scenario. So poor Mike Stark has had to, fight all these fires and calm people down. Even myself, I have to admit, reading the news releases, it was very confusing to see which target that these different holes reported relate to. And I did spend some time. I put together some graphics, which in the Substack you'll be able to see, and because it's really key to understand how is a story evolving, how is it changing, and adapt one's expectations. Because the kind of selling we've seen in the past few weeks in Arizona gold, that's a result of people feeling they've lost connection with what the story is, what it's supposed to be, and where it's going. I think that will be resolved soon. Hopefully there's something good in the remaining holes from BLM pad number 1, but I'm more counting on the Rising Fawn drilling that's underway now.
What is the Toodoggone District Consolidation implication of Amarc's acquisition of the Brenda claim?
Well, Amarc Resources announced on February 11th that it had secured a 100% option on the Brenda property, which is just to the east of where they made the Aurora discovery that was announced in January. The Aurora discovery is very unusual because the standard Toodoggone District copper system that you have at Chemes, it's 0.2 to 0.4% copper, and you get 0.4 to 0.6 gram per ton gold, which is pretty good. And there's 1 billion tons there, and it is being mined by Centerra. Some of it's been mined out already. But here with the Aurora discovery, we got copper grades in the 0.4 to 0.6 percent range, but the gold went way up. 1 gram to 4 gram, and there were even some 3-meter intervals that were 8 grams. And what's interesting is they were all 1 gram or better, and none of them were above that 8-gram level. So this is a very consistently mineralized system. It's essentially blind because it's in a valley covered with talus that's been shed from the ridge lines to the side, to the east and to the west. And the Brenda property is just to the east. Now, Consolidation Resources has had this property since 1985 and has done work on it, and it's been mainly focused in what I think is called the White Pine target, and that lines up with the Pillar Fault, which also goes north through the Pill property of Finlay Minerals. And Finlay Minerals staked that in the late 90s. It has had it forever. Cascadia Minerals spent almost $2 million on it in the past few years, dropped it in December. And the middle of that property where that Pillar Fault is, that's been the focus because that's where the Black Lake intrusive suite and the Takla volcanics, both of which are regarded as the proper hosts for decent copper gold or even gold silver epithermal systems to be there. That's been the focus. The rest of the property is covered by the Hazelton rocks, which aren't seen as sufficiently permissive to develop major deposits. And there was some drilling done in the western part of the Brenda property, but not enough, I think, to kill the potential there. So this is a property that's sort of like a big thumb sticking into the Joy project, and Consolidation Resources has been suspended. Their focus was Mexico, and they wanted to spin out the Brenda project some time ago, but all the problems from the last few years cascaded on it. And so Amarc approached them, and the deal, it's pay $400,000 annually for 5 years, and you have a buyout option to purchase it for $8 million outright in the first year, escalating to $12 million in year 5. Now, this is within the 1 kilometer area of interest clause that it has in its joint venture with Freeport. So it now has to offer this to Freeport under the terms of the farm-in agreement. Now, what we're waiting for with Freeport is for the $35 million spending threshold to have been reached, which vests it for 60% in Joy. And then they'll probably have a couple of months decision to either elect to go to 70% by promising to spend the next $75 million, or form a 60-40 joint venture with Amarc, and we don't know which way it will go. From a hardball perspective, it makes sense for them to go 60-40 and force the HDI group to sit there and raise 40% share of a program where they're no longer operator, where Freeport is the operator, and this is a bit of a headache for Amarc. They are thinking of spinning it out so that it owns just this interest, and Freeport will have 45 to 60 days to decide whether to include the Brenda project. Obviously, it's going to do so because the implications of Aurora, it's far better than what they had in the Pine and Next Trends in the southern part of the project. It's very different for the whole Toodoggone District. There's this big area now surrounding this, and I've drawn a big circle around it. This area is all untested ground, and so it's very clear when you look at the map like this is Freeport, assuming it stays the owner of this project, will have to own the Brenda, and of course it'll own the Joy project, and it'll have to own TDG's Baker Shasta project, and it will have to own Finlay Minerals Pill project. So this is now sort of ground zero for an entire new exploration wave. And it's kind of interesting. I was talking to Stephen Quinn of TDG. They've got in their presentation maps showing all these gold and soil anomalies to the east of the Shasta deposit, and that's about 800,000 ounces of gold plus silver, and it's just not big enough to be an open pitable mine standalone. But it's now believed to be perhaps even a down-dropped peripheral portion to a major porphyry system in the east. And I think the eastern flank of the Baker Shasta project that has enormous potential for copper-gold porphyry systems, possibly similar to what's on Aurora. And the Aurora system itself may extend onto the TDG ground. And there's one hole drilled way in the northern corner. Apparently, it's still pending. There's holes in the south that are pending. But this one's intriguing because it was drilled so close to the Finlay and the TDG border. And apparently it's because of this was road access. Incidentally, I asked Diane Nicholson, why was the NWG Gossam, which has become Aurora, the last IP anomaly to be drilled in the Joy project? And the simple answer is that there are no roads in this area. It's the farthest away from their camp, so it's helicopter supported. So in kind of like cost-saving mode, they saved that for absolute last. And it was indeed a big surprise when the first hole intersected mineralization, just bristling with chalcopyrite and evidence of big juiciness. The degree of gold content was a bit of a surprise when it finally arrived in the week before for Roundup, and that's when the stock started to come alive, and it has changed everything. So if Amarc, because of its area of interest clause, it can't do any deal with TDG or Finlay without having to offer it to Freeport, and Freeport will either own 60 or 70% of it. So one of the things it can do is, if it spins out the Joy project as a separate entity, a corporate merger is a possibility, because you, as a company, you can't do a farm-in deal on somebody and not share it with your area of interest partner. But when it's the corporations merging, that's not the same thing. So what I see as coming is we're going to see maneuvering going on. And obviously TDG has the $15 million. Much of it came from Skeena Resources. It's ready to go drilling. The permit for the Shasta deposit area extends to the east. Those gold and soil values that they have on their map, those are from decades ago when Newmont was in the area, and there were some holes drilled, but they were shallow and not really holes drilled with much conviction. So even though there's all this soil geochem, and it's not shed downslope from the Shasta, because it's actually upslope on the ridge that sort of straddles the Aurora property of area or Joy project of Freeport and Amarc and the TDG ground. So they'll be in there drilling later this year. Finlay Minerals has to do its own target development work, and it has to do the permitting, so that can take a long time in British Columbia, depending on the mood of the First Nations, their willingness to bother with consultation and so on. But it is the one that's the cheapest. It doesn't have a lot of money. It's owned by John Baraxo. His daughter Ilona Lindsay has now taken the lead. They own 45% of the stock. Robert Brown is the CEO, and he's been with John, since the late 90s when they formed this company. And they also own 100% of the Ati project, which is at the southern end of the Joy project and abuts the Chemist project that Centerra now operates. One of the things they could do is even consider spinning out the Ati and the pill into a separate entity while they keep the say in the Silver Hope project, which John Barraxo also staked ages ago based on his experience as a geochemist and working first for Kennecott and then as a geochemist, lab owner, operator. In the late 90s, when everybody abandoned British Columbia because of the NDP government, he went on a staking binge based on his knowledge of what geochemistry works for systems. So this collection of properties that's been in this eternal bottom fish, if we are entering a secular bull cycle for resource juniors, these are going to become very interesting. But because they're shell-shocked and have been in this bottom fish mode for decades, the stock is the biggest winner in my bottom fish collection because it started the year off at 3-4 cents. There's always the risk that management does a deal too soon, too cheap, because any deal is better than no deal. So it's staying in the bottom fish collection until we get better clarity. But there is one angle which could help the company. Skeena Resources invested the money in TDG and gave it just under a 10% stake. It doesn't have any special seat on the board or anything, but it saw the opportunity. Walter Coles moved quickly, and they now have a stake in this. And they could just as easily, after they sold the Sophia project to TDG, which is on the eastern side of Finlay's Pill project, why don't they also approach Finlay and say, we'll do one of these charity deals so we don't have to dilute down here at 10 cents and, get it done in the 20, 30 cent range, give you $3-4 million. We know you probably can't spend it there, but we think you have permits elsewhere in Silver Hope and these other projects where I'm sure you have good ideas of how to spend it. So one of the possibilities is that rather than see them do a premature farm out or do a dilutionary deal with, Bay Street or House Street brokers who are going to do the clip and flip stuff, maybe they'll do a deal with somebody like Skeena, who also gets a 9.9% interest. And then both of them with their 100% owned projects can advance them. And perhaps it is TDG and Finlay, or at least the spin out of the Pill and the Ati, who down the road merge together with whatever it is that they find. And then that makes it easier for Freeport after it's swallowed Amarc to acquire the whole thing and end up owning the entire new Toodoggone District, which the market wants very badly to rethink as having potential that's 5 times better than what has hitherto been found by past explorers.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.